when there are two stocks of primary competitors like Uber and Lyft, there can still generally be high positive correlation similar to the last example, comparing a group of stocks within the same sector. In this example, we'll focus on what happens when the correlation coefficient significantly decreases for a more sustained period. We'll especially focus on this kind of situation where a solid negative correlation is sustained. Price movements of the two stocks will of course diverge slightly. Then when they begin to converge and get back on the same path, with the correlation coefficient going back into positive territory, the movement, in this case, the continuation of an established uptrend, could be considered stronger since it's happening during the reversion of the correlation coefficient back to its more common state near +1. A similar thing can happen when the correlation coefficient drops significantly, but not necessarily below 0. Like in this case, it's the same general setup, except the correlation coefficient only goes near 0 before it rebounds back up closer to +1. By now, the correlation has been hovering near those high values for quite some time, so the movements of the two stocks are closely back in sync, resulting in this price drop being considered stronger. Then when the correlation coefficient still remains near 1, this more recent and flatter movement can be considered an even more indecisive period, since it takes place with both stocks at the same time. The neutral to bullish phase continues, but to a less synchronized degree, as correlation coefficient values are still high but less consistent, with more frequent drops back down towards 0. With the recent dip below 0, followed by the current return back up towards +1, broader context was favoring this uptrend continuation. When the correlation coefficient is close to 0, the relationship between the movement of the two stock prices is essentially not present, since they don't move strongly opposite to each other or strongly with each other. Then there's that same effect again, rising back up towards +1, where the movements will be much more in sync and considered stronger. In this case, a stronger downtrend. Sometimes, especially in the bigger picture, sharp drops, even going below 0, won't always necessarily have as significant of an impact, especially if they only last for a relatively short time. Here's another dip of the indicator and a major divergence for the two stock prices. As usual, there's a reversion back towards +1, but those high values aren't held for long, resulting in the prices of the two stocks not converging as closely together in one direction like in the previous cases. Here's a great example of a much longer held negative correlation, which results in a much longer lasting impact on how these stock prices move in relation to each other.